Thank you. For those of you who are not used to not being on Zoom, welcome. It's a pleasure to see everybody enjoying themselves, seeing New York on its way back. Little bit of feedback. Thank you for the feedback. Welcome to Red Connect. Thank you, Selman Yeltsin, for founding this wonderful organization. As many of you know, Selman was the founder of Red in NYC. This is an entirely new iteration of that event. What will come out of this and will come out of New York in the next years to come are the more close encounters with business people, the kind of events that Selman has been putting together over the past several months, will be putting together much more so in the future. The kind of events where business people can come together, meet potential finance sources, meet people that can market their business, no need for a business development dedicated person, where you can also come meet people that can do your media relations, your PR, and anything else that you need to support your business. Selman will be hosting these events over the coming months. You should stay tuned for your email inbox to be acquainted and oriented to many of these wonderful events in the next several months as New York comes back to business. Our first guest tonight, in Selman's first interview, will be with Rehan Huda. Rehan is the CEO and founder of Green Sky Labs. He is an experienced investment banker over several decades, having raised much capital in the world markets. Presently, Green Sky Labs is a Canadian-based technology company specializing in the cannabis industry. It's my pleasure to welcome Rehan and Selman, who will give him an interview, and then we will have two additional guests that are icons of New York real estate industry, and you're going to want to hear what they have to say. Selman, Rehan, please.
Thank you. Thank you. So, Rehan, tell me about your company, Green Sky Labs.
Okay, thank you, Selman. It's a pleasure to be here. Rehan Huda from Toronto, Canada. Any Canadians here? Yeah. All right, right on. You know, Canada's in a lockdown, so we can't go back, so that's why we're all here in New York. So it's a pleasure to be here. My company is a Canadian company, although most of my business now will be in the US. We have some very interesting technologies in the biotech space, very new applications for pharmaceuticals using cannabis. We also have some very interesting extraction isolation technologies. And the biggest one that we're just launching just recently is a new AI machine learning genetics-based platform with IBM, which we think will revolutionize healthcare. So we're quite excited about that. And our company is on track to go public in Toronto.
So Green Sky Labs has 5 different divisions. Would you like to talk?
Yes, we're basically a technology incubation fund. We have 5 proprietary technologies at different companies. We have the largest hemp operation producing CBD out in Canada. We have the largest extraction facility we'll be building in the United States to produce CBD oil. We just patented a new way to get THC and CBD for pharmaceutical applications. We're taking our company to NASDAQ. It's already a public traded company. We're doing clinical trials at the University of Tennessee for CBD and diabetes. And then finally, we have this Nobel Prize winning CEO, a Nobel Prize nominated scientist in genetics, General Wesley Clark on the board, and with IBM, a whole new genomics platform. That's our fifth company, My Next Health, who just formed very recently.
Genetic division is really a groundbreaking. Can you tell us a little more about that?
Okay. Now, genetics, have any of you here taken a 23andMe or Helix genetic test? Okay, so a lot of you. And so basically what's happening is we're taking the data that you've given us, many of these companies, and using that data, we will have new applications, new type of pharmaceuticals, in that our scientists over the last 5 years has done 10,000 case studies in Canada with the University of McGill, and now we have what we believe is the most groundbreaking genetic platforms, root causes of many cases of cancers, autism, cardiovascular diseases. We'll be launching a number of new clinical trials, and we, with IBM and our platform, have been able to predict everything about COVID for the last year and a half. And so it's a remarkable platform which we think will change healthcare. A recent book by Walter Isaacson, who was a former chair of CNN, basically said that he thought genetics will be the next revolution for humanity, and basically maybe the most important revolution we've seen over the last 100 years. And so we're quite excited for our team to be part of that.
And also heard you go public and a press release.
Yes, our parent company, Green Sky Labs, we did a press release. We'll be going public very soon. And then our genetics company will be going public with a SPAC on NASDAQ towards the end of the year.
Thank you for everything. And if anybody wants to learn about more, you can reach out to me. Thank you.
Thank you, Selma, and thank you, Rehan. Can I just have your attention, please, because you're going to want to hear our next two speakers. Excuse me. How's that? Closer. Okay. It's always easy, not speaking in this mic, it's always easy and a pleasure to introduce New York icons in real estate, and we have two of them this evening. It's going to be my pleasure to introduce Bob Knakal, who is chairman of investment sales, co-head of the New York office of JLL, certainly someone that we all know and want to hear more from this evening. We all know Bob's background, founded Massey Knakal, sold to Cushman, now J&L, heading their whole capital markets division. Bob and Kent Swig will be our guest interviewees tonight. Kent, of course.
Get up here, Kent. Where are you?
Is back.
Bueller!
Kent is joining us right now.
Bueller!
Kent is co-chairman of Terra Holdings.
I was just going to listen.
Kent is joining Bob tonight in a very, very in-depth discussion of the state of the market in New York real estate today. Kent, co-chairman of Terra Holdings, owner and president of Helmsley Spear, Falcon Pacific Construction, the Swig Company, a member of many philanthropic and civic boards and institutions. My pleasure to introduce both Kent and Bob. Solomon, take it away.
Thank you. And I want to start with you, Bob. Where are we in the cycle right now?
All right, well, first of all, I want to say how great is it to be back in human contact as opposed to on Zooms, right? So, let's hear for Selman for getting everybody together. So where are we in the cycle? That's a great question. I think that if you look at where we are today, you'll see that the peak of the cycle in this period was in 2014 and 2015. Since that time, both the dollar volume of sales and the number of properties sold have been falling. And I think that the bull market in real estate and investment sales in New York City actually ended in October of 2015. At that time, there was a realization that all of the supply that was being built was exerting downward pressure on underlying fundamentals. And at that time, the market changed. And so I think from October of 2015 through February of 2020, the investment sales market in New York was mostly in a volume correction. The volume of sales from a number of properties sold perspective had fallen by 52%. The dollar volume of sales had fallen by 56%. And then COVID comes along in March of 2020 and converts this mostly volume correction into a value correction. And from October of 15 through February of 20, values had only fallen by 10 to 12%, which relative to past corrections, for instance, the Great Recession, 07 to 10, value dropped by 38% on an average price per square foot basis. And during these savings and loan prices in the early 90s, values fell by 58% during that period of time. We had only a 10 to 12% drop in value from October of 15 through February of 20. And then COVID comes along, the whole thing changes, and we have particularly three sectors of the market: hotels, retail, and land fell by 40 to 50% in Manhattan. And multifamily was down by 25 to 30%, office buildings down by 20 to 25, and COVID converted everything. And so if you look at what happened in the first quarter of this year, or actually, let me go back to the end of the year. We looked back at last year and said, it's very clear the third quarter of 2020 will be the low point in volume. There was only $1.25 billion in sales of properties over $10 million in Manhattan during that period of time. And then there was $3 billion in sales volume in the fourth quarter. So we said, great, we're coming out of this, because this has been the longest malaise the market has ever seen. In the S&L crisis in the early 90s, 4 years of falling volume. The recession in the early 2000s, 4 years of falling volume. And then we had 5 years of falling volume. Fourth quarter of 20 is great. We're coming out of it. This is fantastic. Everything's going to be wonderful. And the first quarter totally stunk. Horrible. 1.17 billion. The lowest quarterly total going back to 2009. But where we are today is that we have more people asking, who own properties, asking for BOVs, more listings coming on the market, more properties being put on the market, more people looking to buy properties, more people actually bidding, more contracts being signed, more closings happening. So I fully believe, even though the first quarter was so abysmal, that what we will see is that this year the volume of sales will increase over last year. Last year, 2020 will clearly be the low point in the volume of sales. And for those of you in the crowd that rely on transaction volume to make money, you will see an increase in activity this year. And I think based on what we're seeing with the activity we have on sites and properties we're selling, this year will be a big increase in volume. And there is, for the first time in 5 years, there's upward pressure on property values. And I hope that wasn't too long of an answer, but that's where I see things from where I sit.
Thank you. And what is the status of the residential condo and rental markets?
So basically you're saying you can't fall out of a ditch, right? Okay. So the status of residential, so everything stopped right during COVID. So where are we now? Interestingly enough, the marketplace starting in December, January, if you look at Brooklyn, right, and you look at just transaction volume, which is what, as a brokerage firm from around here, Stevens Halstead, that we look at. Transaction volume in December and January for 1-bedroom and studio apartments, which means, entry-level apartments, was increased by 80% during COVID, right? December, January, over the pre-COVID times. So when we look at the transaction volume, we found that even in the middle of the COVID environment, we had 80% increase of volume. So what that means basically is this: the merry-go-round slowed down for first-time buyers, right? So they could jump on the merry-go-round and get an apartment. Now that was in Brooklyn, Queens, not so much in Manhattan, because Manhattan was perceived as New York City, where Brooklyn and Queens weren't. So we started seeing a big uptick, and the importance of that means that people felt that they wanted to stay in New York. They were investing in New York City. And that's a big deal, 80% increase during COVID over pre-COVID. And what's going on now? Starting in about mid-January, we found that the activity level on the 4 million plus apartments each week has broke for new deals. So these are things we'll read about in the future, right? Each week increased in activity levels higher than the past 20 years. Every week we broke a record for new activity levels over $4 million. So it means people are spending a lot of money here. Values, yes, are down, but when you're spending $4 million, $5 million, $10 million for an apartment, regardless of the fact that values are down, it's a big plus for New York, and it's a big confidence builder for New York to say that people are spending that kind of money in here. So activity-wise, I think we're doing phenomenally well. There's two parts of that though. The new condos, right, which are out there, were hurting prior to COVID because we had a massive amount of new supply, and it was all priced, in my opinion, rather ridiculously. So when you look at, when did COVID start? 2020, right? So when you look at 2019, you looked at 2018, you looked at 2017. Each year going forward, the activity level decreased. 2017 over 2016, 2018 over 17. So we were going down in activity levels because people, the developers, were pricing out properties at a silly price level. That now has changed. Prices have gone down, product is still available, and people have at least the good feeling that New York is going to sustain itself and go forward. So our business is looking at activity. Pricing is almost irrelevant. It's very relevant if you're a developer, but otherwise it's not so relevant. What we're looking at is, are people spending a lot of money in New York City, and are they committing to a long term? The answer is yes. So we have a recalibration, we have a resetting of price, but it's the energy and the good feeling and the confidence in New York, and that's what's happening today. Go ahead.
Ken, how much of that activity is based on these extraordinarily low interest rates we have? Because I've always said that interest rates are like rocket fuel for commercial real estate, residential real estate. How much of what you're seeing, that was a very kind of optimistic perspective. How much of that do you think is predicated on interest rates, and how much do you think is based on supply-demand imbalance?
Supply-demand imbalance is, on new development, it's oversupply, period. Interest rates were low already to start, so they went down a little bit. It's a big deal. Interest rates are a big deal, but they were already low before. They were low when the market went down in activity level in 2018. They were down. Interest rates were low in 2019, and going into 2020, they were down. So the transaction volume decreased in spite of the interest rates, and that's because people were asking silly prices. So if we were in an environment that had high interest rates, would we see this activity on the lower end stuff? No, we wouldn't right now. So we are interest rate sensitive always, but we're in an environment that has had low interest rates that are so historically low that if they tick up a little bit, they're still relatively low anyway. So yes, it's an impact, but when they were low, we were still going down in volume of transactions. So yeah, it's a good question. I'm not sure.
It's been for 11 years we've had these.
Right, but it's been going down in transaction volume on the residential side. Selman?
Bob, what does the future look like for investment sales?
Okay, so what does the future look like? How many people, show of hands, how many people deal with investment sales in New York City? Okay, so a decent amount. I think investment sales volume is going to be completely dictated by externalities these days. What do I mean by externalities? I mean tax policy. A very, very smart guy named Warren Buffett has said that tax policy does not impact market participant behavior. I love Warren Buffett. He's the smartest guy in the world. He's 9 million times richer than me. But he's wrong when it comes to commercial real estate in New York. Tax policy impacts market participant behavior more than anything else. Over the past 36 years, there have been 5 years, or over the past 36 years, 5 years in which sales volume spiked. 3 of them were catalyzed by increases in tax or changes in tax policy. 1986, we had tax reform of 86. 1998, we had capital gains drop from 28% to 20%. And in 2012, there was a 3.8% increase in capital gains taxes embedded in the healthcare law. And leading up to the elections that year, every politician was talking about increases in capital gains taxes. So what did that do? That created 1,200 property sales in Manhattan in 2012, more than ever before in history.
Before they took effect.
Before they took effect, people rushing to beat the increase. We have the same thing now. We have capital gains tax increases looming. We have changes in 1031 exchanges. I believe that what you're going to see is a massive, massive sell-off of properties in New York City this year based on changes in tax law. And right now, the Biden administration is trying to make those capital gains tax increases retroactive to the beginning of the year. So basically, this has never happened before. Every tax change that has ever happened, if it was in favor of the taxpayer, it was retroactive to the beginning of the year. If it was against the taxpayer, it went into effect the next year. They want to make these increases in capital gains retroactive to the beginning of this year, totally screwing over everybody that's already sold properties. I don't think that will happen. But I think based on the fact that taxes are going to increase, you're going to see a massive sell-off. I'm going to be very, very busy. If you're investment sales brokers out there, you're going to be very, very busy this year because people are going to want to sell to beat that increase in capital gains taxes or to take advantage of 1031 exchanges that now give you full coverage of deferment where that's going to be marginalized. So you have many things that are impacting the market and how it's going to proceed. And I just think that you have to be very, very careful and pay attention to what's happening on the tax front because it profoundly impacts what will happen with transaction volume and how busy you'll be, whether you're a broker or a lawyer or a title closer, whatever you are. If your livelihood is based on transaction volume, you have to look very closely at what's happening with tax policy because that more than anything else is going to impact how many properties sell before the year ends. So I think that, Selman, you asked what's in store for the investment sales market. It's all dependent upon what happens with externalities, with policy changes. And so I think that could have a very, very profound impact on what we're all doing between now and the end of the year.
The biggest one is the step up in basis, that the elimination of that, which people have planned their entire estate planning for years and years, and the lack of step up in basis is that's going to really impact real estate in ways that we don't even understand right now.
Ken, what has the dislocation from COVID done to the opportunities?
So, there's a Chinese character, right, that says, the Chinese character for crisis is pronounced also the same for opportunity. So, one of the things that we've seen in this COVID environment is the fact that we're living in chaos right now, right? So the supply chain for everything that we need has been deeply impacted. So plywood, like a piece of plywood, a regular plywood, which was $38 for a sheet of plywood, is now $75, right? Because what happened is that the manufacturers had a problem with COVID, the distributors had a problem, the shippers, et cetera. So what that creates, in my opinion, is a great opportunity. So for me, for instance, I ended up starting a PPE company with my kids to be able to supply masks and gowns and gloves for the marketplace. I have no business being in the business. I don't really know what I was doing to start, but at the same time, if you look at the marketplace and you see a problem, and you can fix a problem that you see, so you see a bunch of variables, and you can fix that one variable, that produces potential opportunity. So going in with my children, we were able to, my sons, now they're not such children anymore, we're able to go in and supply business, product to a marketplace that was in flux. So I would tell you, if you wanted 5 years ago to go with the rental car business, you look at Hertz, you look at National, you look at Avis, there was problems. You take a look now, a lot of them are in bankruptcy. So I would say one of the biggest opportunities that exists in today's marketplace is that anything you can think of and anything that you want to do is wide open in the opportunity world. Because anytime you have chaos and you have disorder and you have dislocation in a marketplace, whatever piece you can solve that's a great opportunity. So for my businesses, which I've been in real estate for most of my life, I'm looking at a lot of different businesses because there's great opportunity.
Bob, what will happen with the rent regulation?
Okay, rent regulation, that's another issue. People have asked me what is going to happen with this cycle. Is the pandemic just a health crisis? Is it not a health crisis? I think there are 4 areas that New York has to overcome these days. New York has to overcome a health crisis. New York has to overcome downward pressure on real estate fundamentals based on all the supply that's coming to market. As I said, we first started to feel this in October of 2015. Why did we start feeling it then? Why do we feel this downward pressure? Because all the development sites that were sold in 2010, 11, and 12 started to come to market, and that supply exerted downward pressure on underlying fundamentals. But we have political headwinds that are significant, and those political headwinds are impacting the multifamily market more than any other market. And we also have fiscal headwinds. We have a fiscal crisis in New York, and that fiscal crisis is going to impact the way the city implements its real estate tax policy. So with respect to your question, Selman, how is the multifamily market going to be impacted? In June of 2019, there was a significant body blow given to the market with the changes in the rent laws. And from what we're hearing from our folks in Albany, there are going to be even more negative impacts on owners of multifamily housing with legislation that is more pro-tenant, more hurdles for owners to get over. That's going to be a very, very challenging thing. So in terms of how I see things moving forward, I think that the multifamily market is going to have to deal significantly with legislation that is going to go against owners. A lot of people are talking today about universal rent control. What's universal rent control? They're calling it good cause eviction. All right, so let me ask you something. Good cause eviction. There's an owner of a property in Chelsea that has a rent-stabilized tenant that's in Rikers Island waiting for murder charges to be brought against them. The owner of that building can't get possession of that apartment. So if you murder somebody and that's not good cause, what's good cause? Do you have to murder 10 people? Do you have to murder 50 people? What's good cause? What's the definition of good cause? Right? So I don't know what the good cause is. You have a tenant, you have to give them a renewal lease. You're capped on what you can charge them for rent. Essentially, the problem is that our elected officials today do not believe that residential real estate should be a for-profit business. And that is the number one problem that we have, is that capitalism is dead. You can't make profits on owning property. And so the headwinds are significant. The headwinds are numerous. The headwinds are legislative, they're political. There's a number of things that the market has to deal with, but I think that the industry has to unify around these issues and realize that if you can't do the things that the free market says you can do, the quality of the housing stock will diminish. And let me go back to 1977 on this. Now I'm getting very, very passionate about this, right? I'm a lifelong, diehard New York Yankees fan, right? I love the Yankees, right? Love the fucking Yankees. The Yankees, 1977, World Series against the Dodgers, game at Yankee Stadium, the Goodyear blimp pans out. There were 6 fires within 3 blocks of Yankee Stadium. And Howard Cosell famously says, "The Bronx is burning." Well, why was the Bronx burning? The Bronx was burning because it made more sense for property owners to burn their building down and collect insurance than to invest in their property. So what did the city do? Smartly, they created the MCI program, the IAI program. These programs incentivize the private sector to invest hundreds of billions of dollars in the housing stock. 1975, the dilapidation rate in New York City, dilapidation rate meaning the amount of apartments that were uninhabitable, is 14%. Last year, the dilapidation rate in New York, 0.04%. Why was that? That was because the IAI and the MCI programs incentivized the private sector to invest hundreds of billions of dollars into the housing stock. Now, based on the law changes in June of 2019, they marginalized those 2 programs to the point there's no incentive, there's no motivation for the private sector to invest in the housing stock. And so these politicians are totally in the clear because the housing stock is not going to deteriorate overnight. It will take years, but it will deteriorate. And so I think you have to look at all of these things and realize that the marketplace needs to create incentives for the private sector to invest in the housing stock. Look at the quality of housing in public housing. NYCHA, look at housing. Look at all the articles written about what's happened with public housing. It's an abomination. We don't want our private housing stock to get to the same quality as the public housing stock. So I think we have to talk to politicians, have them understand that we need to have incentives for the private sector to invest in housing. It will keep the quality of the housing stock up. And if we don't do that, we're going to get back to where we were in the mid-70s, where people thought it was better to burn their buildings down than to invest money in housing. So I could go on for hours about this, but
So let me agree with you 100%, except here's an issue. The problem is we have a massive housing problem in New York City. That's just what it is. We have a disparity of very wealthy people, and we have a group of people that cannot afford housing. The problem is this: instead of reacting to a thoughtful and really good idea, what happened is this: the politicians took the easy way out. Let's put legislation out there and let's preserve all this housing. Let's make sure that we have continued rent stabilization, and let's not allow any increases, which is not a good idea. The solution is not that. Anybody that has children will understand that, right? If you have children and you tell your child, please don't do this, and then you hand them a lollipop and yell at them, but you hand them a lollipop, they're going to continue to do whatever you're asking them not to do. And you continue, and you yell at them more, and you hand them a lollipop, and guess what they do? They continue to do the same thing. People do not react to negative reinforcement. They react to positive reinforcement. Okay? So what the legislation has done, and the politicians have done, which is what you said, is they just came up with a bill in June of 2019 that was written in 2 weeks, was voted on, and nobody ever read the bill. And it put back all the problems that we had before. It made it so that you could never increase rent, ever, on a rent stabilized or rent controlled apartment. So why would anybody ever invest money in their building or invest money in a unit if you could never increase rent? So that's a simple, easy solution, which is very naive and very, very simple. What the problem is that we need more housing to supply for people that can't afford it. So what do? You incentivize people. If you give incentives to your child, go do this and I'll give you X, Y, Z. Do better in grades. People react to that. And what the politicians have done is they haven't thought about that properly. So what would you do? We need more affordable housing. Take Queens Boulevard as an example. The widest boulevard in New York City. Great transportation. 3-to-1 FAR right now. Go pump it up to 18-to-1 FAR. And nobody gets that unless you have 50% of your housing, 40%, whatever it is, as affordable housing. So what happens? You're not taking anything away from anybody. You're giving an incentive to somebody. If you don't want the incentive, keep 3-to-1 FAR. You want the incentive, and believe me, developers will want that. You're going to build 40-50% rental affordable housing. And you're going to have a massive amount of affordable housing, which will then alleviate some of the problems that we have. And you don't have to punish landlords to hurt them from ever providing housing, from ever making a living. So that's what needs to be done, and we need to have incentives for that.
And I agree completely, and let me tell you something. The private sector has such dexterity. They will move. They will do anything you want. If the incentives were proper, the private sector will do anything that the incentives direct them to do. And so the incentives just have not been right. In the Bloomberg administration and the de Blasio administration, they have not been correct. The private sector is a capitalist animal. They will do whatever they can do to make profits. If you set the parameters and the goals and the incentives properly, you will get whatever you want. The politicians cannot get out of their own way. If they created the incentives properly, you would solve every problem for affordable housing. You'd solve every problem for workforce housing. You'd solve every problem in the city. Just use some common sense and create some incentives that will make the private sector do what they need to do. There's hundreds of billions of dollars out there that want to get put to work, want to create buildings, build buildings, do things. Don't make stupid incentives that don't incentivize the private sector to act. It's a very simple solution. Thank you, Robert.
Ever thought about running for mayor?
I thought about politics, but I love my family too much to get into politics.
I was just jabbing you.
And Kent, what lingering effects will the COVID have on business?
So, interestingly, will COVID impact us? Yes, for a long time it will impact us. 1918 hit, and we were impacted. Then we hit the Roaring '20s, etc. So, will this impact us forever? No. But will it make us aware of things? Yes. So, 35,000 to 50,000 people in America die every year of the flu. How many people had flu last year? Nobody. And if you did, nobody admitted it because Lord forbid we admitted we were sick. So having a mask, taking our temperatures at certain times, those things I think the mask goes away, but I think taking our temperatures and being aware and washing our hands and doing those things are real. Change of air supply take a look at the airplanes. How many people flew on an airplane and everybody used to say, oh my God, I was on an airplane and I got sick. It was the worst thing in the world. Now, people are flying on airplanes, nobody's getting sick, nobody gets COVID because we figured out how to change air, how to clean the airplanes, and how to wear a mask on a plane and nobody's even getting COVID. So yes, there are big impacts that are going to stay with us. Air supply, air changing, quality of cleanliness is going to be a big part of what we do. Interconnectivity, it's like, look at this. We're already back. For the first time in my, in a year, I'm sitting here and I'm not thinking about being safe. I'm taking it for granted again that I can walk in an environment, hug my friend, shake hands with people, and I feel safe. So that's our human instinct. That's going to go away. But other pieces are going to stay, and I think they're going to be for the benefit of that. So I think it's a balance. Then what comes to, are we going to be at work every day or not? I think if you got 100 emails and you want to go stay home and you want to go whip through those 100 emails, yes, maybe one day a week you're going to go work at home. But is home work, home effort, home stay going to be a part of our business? I don't think so much. Maybe one day a week, possibly. Look at the technology companies, right? If you look at every corporation right now, they all say that the reason people can work from home is because of great technology, okay? The technology companies, if you look, Google, 10,000 new employees that they announced, they're all going to be working from a business environment. Facebook took 1.7 million square feet sitting at the Hudson Yards. They have not yet occupied those space, and they already took 750,000 square feet more at the Farley office building, not yet built, and they took that in the middle of COVID. Amazon bought the old Loren Taylor place from WeWork, and they're doing it. So all the technology companies believe that they have to occupy office space. So if you look at this, I think office space and that kind of operation is still going to be here because nothing replaces creativity, opportunity, and the interactivity of human interactivity. So some yes, but most of it I think will actually fade away a little bit. But the quality of breathing and safety I think will be there.
Next question, Bob. What sectors are doing best and still hurting?
Okay, so what sectors are doing best and what sectors are still hurting? I think in the land market, we've seen upward pressure. First of all, I would say every sector is coming off its low, and there are upward pressure on prices for the first time in 5 years. I think clearly industrial is doing the best. Industrial properties, cap rates on industrial are now sub 4%, which we've never seen in history.
That's retail.
Which is crazy, and it is retail, it's hybrid retail. But I think that every property sector is seeing upward pressure exerted on it. I think there's a lot of capital out there that's looking for deals. And, I think that we are on the precipice of the market correcting in a very, very positive way. I think we're going to see higher or additional pressure exerted upward on property values, and all sectors are seeing additional upward pressure. The only thing I'm concerned about is what the politicians are going to do in the multifamily sector with rent regulation. I think that we have a rent freeze that will not be unexpected. If we have universal rent control, that will not be unexpected, whether it's in this legislative session or the next. That's a concern, but I think generally there's a lot of positive momentum in the market. We've been in this malaise for over 5 years now. It's time for the market to swing back. I've always said what goes up will go down, what goes down will come up. The market has always been cyclical, is cyclical, and always will be cyclical. And so I think that we are on the brink of some very positive stuff. So I hope that happens, but we'll see.
Thank you all for coming, and see you guys next time on July 8th.
Thank you again. Don't forget, sign up, learn more about membership, get in touch with Selman, and we'll see you at the next event.
Hi Alla, nice to see you again.
Nice to see you, Salman, as always.
So I remember you came to our first event back in 2017.
I can imagine it has been already 4 years, and congratulations that you are still continuing to grow. There is a lot of opportunity ahead, and cheers to many more events to come. And I'm really glad to see the full event space over here with many beautiful people, professionals who came over here, and they are celebrating together a new start.
So tell us a little bit about what you do right now.
So basically, COVID made its own impact on the thing that I do as well. So I started running my own company that used to exist as a side business. But I decided to go full in, and now we do 3D virtual content for real estate, meaning renderings, 3D virtual walkthroughs, and 360 showcase.
So that's amazing. So if anybody has that projects, and how do they contact you?
You can just go to aodesignlab.com website, or just shoot me an email at Alla, ALLA, at aodesignlab.com.
Thank you for coming again, and hope to see you again. Thank you. Hi, Kaveh. Nice to see you at the Red event. And tell us more about what you do.
So thank you, Salman. It's a pleasure being here. It's a lovely event, and I'm a mortgage banker with Cardone Financial. We're a direct lending mortgage bank. We really specialize in 1 to 4 family homes, residential properties, condos, and co-ops. We also do, rehabilitation loans, 203Ks, USDA loans as well. Ultimately, we are in the market to meet with anyone that's looking to purchase any type of home, looking to refinance and save money on their home mortgage, or take cash out of the equity of their property, and really just consult with the individual, find out what their goals are, and tailor it to find a loan that fits their needs.
And how long you been with Cardone Financial, and how long you been in this sector?
So I've been in mortgage lending on and off for about 4 years. I was there prior to the 08-09 crash, and I recently rejoined about 1.5 years, 2 years ago. My brother-in-law is the branch manager of our branch in Melville in Long Island, and I work out of our Brooklyn branch. But yeah, that's ultimately been my time with Cardinal at this point, and in the space, there's a lot of lending experience between my brother-in-law and my father-in-law, but about 40 years between us.
And what do you think about these networking events that are coming back? Have you met anyone here?
I would say that these networking events are ultimately what all of us need to be doing at all times, right? There are, in this industry, anyone can be a relationship, anyone can be a contact, and you're broadening your horizon and you're really finding people that you can connect with. At this type of caliber of event, especially, you're really finding the type of individuals that you want to meet with and that you want to ultimately make connections with. So I find tremendous value in being here, and I really appreciate the invite.
And hope to see you at the next event and be more involved with Red Connect.
Absolutely. We're looking forward to it, and I'm looking forward to, again, more larger events and definitely some of the more intimate events as well.
And I hope to see you again. Thank you for coming. Thank you. Hi, Barry. Nice to see you at the Red event. And you came to the first event last month. And here you again. Also, you came to one of our dinner events too.
Yes, I did.
Yeah. Tell us a little bit about what you do and what you're looking for.
Thank you, Solomon. You're an excellent host. I'm a construction consultant, so I advise developers, owners, investors, other entities on getting their projects built. A little faster, a little cheaper. Construction is unfortunately fraught with a lot of problems. Everyone knows projects don't end, they go way over budget. A lot of owners aren't experienced. Some of them are experienced, but they're very busy, or they're very busy doing something else like raising money or finding the next deal. And they need someone to watch their project, perhaps a professional. So that's where I would come in, work for them, and I could handle a project from A to Z, from acquisition to occupancy or anywhere in between. And I like to cast a net of oversight, keep an eye on the whole process, the architects, the engineers, the construction company, all the contractors. That could be a couple of dozen entities and companies. Someone's got to make sure everyone's working for the owner's interest. And they don't always work for the interest of the owner. Time and money, and get the thing done and get it open. So that's what I do.
And have you been meeting any potential clients at these events?
Actually, yes, I have. I was very pleased because normally when I network, my goal is to make connections, to grow my network in the New York City real estate industry, and then over time, there's karma, hopefully, and somewhere, somehow, someone makes an introduction. But I've been pleasantly surprised that there are potential clients coming to these events, including the dinner, and I think it's very valuable for a lot of people.
And hope to see you again at the next event. And nice to see you again. Thank you. Thank you. Hi, Brendon. Nice to see you at the Red event. And is this your first time coming to the event, or you came before?
I've been to other events before. Yeah, I loved it. I brought some of my agents here with me tonight as well, and it's very informative. We definitely wanted to see Bob Knakal. He's an expert and somebody we all look up to. Commercial real estate, and we got to see him. We got to meet a lot of other great people here. Looking forward to the next event.
And how long you been in this business, and which company you work for?
5 years, Palladium Property Group. It's my own investment brokerage. I was in finance for 10 years prior to that.
And would you recommend this event to other people in real estate?
I absolutely would recommend this event to other people in real estate. Not only commercial, but residential. It's a lot of very informative, influential people here. It's a great event. We're all having a really good time. The venue is beautiful, and I'm enjoying it very much.
And again, thanks for coming, and I hope to see you again at the next event.
Absolutely. Thank you for having me.
Thank you.
Pleasure. Thank you.
Hi, Victoria. It's nice to see you at our first event. So what do you think about the Red Connect events?
Nice event. I liked it a lot. I think it's very great. I met a lot of interesting people. A lot of businesses were discussed. And I think you did a really great job organizing this. I'd really hope to see this in LA and on the West Coast soon.
Good to hear. And tell us a little bit about what you do and what kind of work you do.
So I work for BNI, Bank Negara Indonesia, and this is a government Indonesian bank that's also private. It's based out of Wall Street here in New York City. and we're moving and opening a new branch in Los Angeles, California, where a lot of Asian and Southeast Asian businesses are based.
And also, what do you think about the event today? Have you met anyone that you could potentially do business with?
Actually, very interesting that you mentioned your sponsor, Green Sky Labs, was a very interesting candidate because they do business with the government of Singapore, I believe. Yes, Singapore. And he was very interested in doing business in Southeast Asia much further, specifically with Indonesia and Malaysia. So we'll see if there's anything that we can do for him.
That's great, and I hope to see you again at our next event. Thank you. Thanks for coming. Thank you. Thank you. Hi, Loren. Nice to see you again at the Red event.
Very nice to see you as well. Thank you so much for having me.
And you're one of the media sponsors as a designs group. And tell us more about what your company does.
Yeah, definitely. So we are commercial interior designers. We specialize strictly with interior spaces. We do everything from healthcare, hospitality, multifamily, retail, you name it. So we really work with a bunch of different architects, general contractors, and just try to design really beautiful spaces.
And what do you think about the networking events? Does it help your business?
Oh my gosh. I mean, so I've been in this for a little over a year now, and it's just helped me grow my network so much. Everybody's so friendly, and I'm just happy to finally be out and meeting people. So it's been great.
And what do you think about the Red Connect overall? This is your second time attending this event. Have you been meeting people?
Yes. So the first time that I was here, just getting used to everything, during the pandemic. But I made some amazing connections. Everybody was so friendly, so welcoming. And now it's even better just because I see familiar faces and everybody is still so welcoming. And it's nice to talk about what everyone's been up to and figuring out how we can help each other. And things are picking up in New York. So it's been great.
Yeah, and hope to see you again at the next event. Thank you.
Thank you.
Hi, Yisroel. Nice to see you at the Red event. Tell us.
It's been a while. I
Good
missed
to see you.
last year.
And tell us about what you do in real estate.
So I'm the managing director at GFI Realty Net Lease Group. GFI is a lot of various companies there. They're a development company. They developed the Nomad Hotel, the Ace Hotel, 5 Beekman downtown, and various other. We also have a large brokerage in New York that does a lot of development sites, multifamily sites. I transitioned mainly to net lease about 7-8 years ago. Most of the deals we're doing is national, anywhere from Walgreens, CVS, Rite Aid, TD Bank. That's on the retail side. On an industrial side, like Amazon, FedEx, and various others. And we've been very active in that space. There's very strong demand. Most of the New York buyers that are selling development sites and buildings, they're in 1031 exchanges if Biden doesn't change the law. Hopefully he won't, or it won't get passed. But 1031 exchanges, and we do that national for mainly New York buyers. And we sell a lot to a lot of REITs. We just sold a large $30 million deal in Ohio to a large New York REIT, WP Carey. And just there's a lot of capital on the market. That's what we mainly do. So more national and local as well. More to assist the local. It sort of works hand in hand.
And how you see the real estate market now, and what do you think about these networking events?
So I think the networking events are great. I met a bunch of people here tonight. Guys I've heard of, but not met them. Like Kent Swig I met. I actually did a couple transactions with him. Actually was a friend of his in an exchange a few years ago. And I see the market. I'm not really heavily involved in the New York market. I hear it's getting back a little better, but on the national, net lease and just national industrial, because guys in my office do a lot of national multifamily. Cap rates are lower, but anyone that bought a deal a few years ago, the price is worth a lot more, whether it's retail, even shopping centers, grocery anchored, multifamily and industrial are worth a lot more. Pricing is wacky. Office, it's really market by market, but I think pricing is down, definitely not up. Maybe if it's in Miami or Florida, cap rates have gone lower and pricing's gone up. But office is a little challenging, hotels obviously as well, and That's where I see development in New York. I would say lower, but I'm not really so much involved. I'm involved to a certain extent, but I'm not looking at deals every day, so I don't know if I know the New York market well enough to know what the market's going on.
Okay. And also, thanks for coming. I hope to see you again at the next event.
Pleasure, Salman.
Thank you.